All right. So the first thing is we're going to have to log into the back office for National Life, as we all do, to do our illustrations. And it's going to be the same location to do the annuity illustrations as you do for the life illustrations. So you log in, takes you to the back office, and you do new illustration. And we're going to go into the product type. We're going to select the single premium deferred annuity, index annuity. So pick this product type, and then you have the options down here. So today we'll be focusing on two, specifically the horizon income and the horizon growth. We're going to run a lot of different scenarios, so stick with me. We're going to run a couple situations here so we can compare them. And what we're going to do is we're going to put them in a spreadsheet so we can kind of see how they all align with the different boosters or no boosters, the max bonus, split bonus. So it's going to be really interesting to look at the comparisons here today. It's going to be a good training. So let's get started. We're going to start with the horizon income. This will be the first product that we have on board. And we're going to keep it simple. We're going to make sure we have the correct state selected, make sure you have the right plan qualification. All right, we have a lot of different options here. I would say the majority of the time you're going to be doing an IRA or potentially a non-qualified. So we'll stick with IRA because that's probably the most common rollover opportunity we're going to have with these annuities. Keep in the owner, type the individual, tap in the client's name, and for the situation today, we're going to do a 50-year-old male is going to be our client. And then we go to the funding and withdrawals page. And we're going to start with $100,000 single premium. Again, keep it simple. And then I'm going to run a couple scenarios. With the horizon income, we have indexing strategies where we do not have a rate boosting opportunity, or we do have the rate boosting, and there's different options. Okay, you can see here that some indexing strategies do not charge, and we have some strategies that do charge a percentage. Obviously, you get more of a potential growth opportunity with the rate boosted indexing opportunities, but you pay for them. So it really depends. So we're going to run both options, one with rate booster, one without rate booster, and then we're going to look at the different clear options when it comes to the income. Okay, so this is a reminder. When we look at the horizon income, you're looking at a product that's designed to create income. That's what it's designed for. And horizon means long term. So we're looking towards the future. So more than 10 years and designed for income. So if the client wants this is the product for it. Now, what's important to note is how do you want to receive that income? All right, you have to choose between the max bonus and the split bonus options. Okay. So real quick review as to what those are. With the max bonus option, you have the opportunity to activate the bonus depending on when the client chooses to elect income. If they want income immediately, in between 2 to 5 years, the bonus is 115%. If it's 6 to 10 years, 125, 11 to 15, 145, 16 to 20 years, 170, 21 years plus, 200%. Okay, so depending on that's what the client wants, they can choose this max bonus option. Now, if they want the split bonus, that means split bonus gives you a 5% immediate interest credit to the accumulation value at issue, okay? So it kind of boosts your money immediately, but what they do is they reduce that bonus further throughout the timeline. So you can see a little bit less, 10 to 25% less, depending on when the client chooses to activate their income. So it just depends on what's important to the client. Do they want more bonus further down the line, or do they want immediate interest crediting and then a little bit less bonus? We're going to look at both options to see how that comes out and how it compares from an income perspective on the illustration today. Okay, so that's the difference between the max and the split. Okay?
Rudolph, do you mind if I just say something real quick?
Go ahead.
With the split, because sometimes you have clients that they say, I want both income and I want accumulation, and usually that's not possible because it's either income or accumulation. If they want both, they have to go split. Okay, because the split is not giving as much on the is not giving as much on the income side because it's giving part of it to the accumulation side. So if they say I want both, it has to be horizon income and it has to be split bonus because then they get a little bit on the income and they get a little bit on the accumulation. Just to keep that in mind, because I know sometimes I've got agents that say, well, they want both, and we used to not be able to give them both. It was either accumulation or income, because usually you have to give up one to get the other. But the split bonus kind of does a little bit of both. Okay, so just y'all keep that in mind. If you've got somebody that says, I want both, that's the only route you can go, okay? Yeah.
That's right. Thank you, Colby. Right, so let's run some quick illustrations and kind of compare them and see how the income is impacted depending on whether we choose the non-boosted indexing strategies versus the boosted rate strategies, and then comparing the max bonus versus the split bonus. All right, so we're going to start here with the index strategies with no rate boost. Let's just even it out, make it nice and simple, 25% each strategy that does not have the charge. Okay, so we have 100% allocated towards the strategies that do not have a charge. And we're going to look at the max bonus as our first option. We'll leave that one selected there. We're going to do our withdrawals. We're going to keep it simple. Let's just do the guaranteed lifetime income, and let's start it in year 20. Let's just max it out and see what happens after 20 years. So our client's 50, we're looking at age 70. Okay, when it comes to withdrawals, no rate boost, max bonus. Do a quick view, and we see here that $100,000 in year 20. We're looking at an accumulation of $171,000, and we're looking at a income of $13,456. All right, so I'm going to put that in my spreadsheets. We're going to compare them side by side. So our accumulation here is $171,000, we said, and the income was $13,456. Okay, oops, a little bit more room there. There we go. Okay. So now let's go back. And let's just change it from max bonus to split bonus without the rate boost. So everything else stays the same. We're just changing the clear option now to a split bonus. So go back to quick view and let's see how the numbers are changed. All right, we see here that we have now about 180,000 is where the accumulation lands, and our income is now 12,466. So we go here, 180,000, and we said 12,466. All right, so we can compare, depending on which strategy you choose. You can see, as we mentioned, you're gonna have a little bit more accumulation when you choose a split bonus because you get that 5% immediate interest credited to the accumulation amount, but your bonus is a little bit less. So you can see how that impacts the max bonus versus a split bonus and the accumulation with the max versus a split, okay? Now let's switch the strategies to include only the rate boosters versus the not and see how these numbers change. So we go back to our funding and withdrawals. Let's make some changes. So now we're going to choose the ones that have the charge. Let's see how that impacts our strategies here. All right, so we have 100%. And then we go back to our max bonus and we keep everything else the same. $100,000 of the rollover. We're going to solve for 20 years. All we're changing is just the strategies and the options. Go back to our quick view and we'll see here, years 19 and 20. So now our accumulation value has grown to $229,000 and we have $17,941 from an income perspective, okay? And this is with the rate boosting, all right? So let's put those numbers in. So we have, with the rate booster, the accumulation here of the, was it the max bonus? Remember, yes, max bonus, 229 and 17,941. Okay. And now let's change it to split bonus. That's simple. Everything else is the same. We're just changing the options. So on this one here, we're looking at 240,000 of accumulation with 16,622. All right. So now comparing. We know that with the split bonus, we get that 5% immediate credit interest, so the accumulation is going to be greater than with the max bonus. But we know that we get more bonus with the max bonus, therefore the income is greater. So again, it's just running these different scenarios so you can better understand what you're offering the client and what's best for them. Some clients may want to have more accumulation and they're okay with maybe having a little bit less income. Others could care less about accumulation and want to maximize their income with the bonuses. So it really just depends on what you feel is best for the client and also what the client's asking for. But by running these scenarios, you kind of get an idea of where the numbers may land. Now remember, we can always change the strategies, on an annual basis with these annuities, and we can mix and match. They don't have to be all rate booster or all no rate booster. You can do half and half, okay? I just want to show you the extremes as how you can see how the potential for accumulation is greater when we do the rate boosting strategies versus not, and how it can potentially impact these incomes when it comes to the strategies, okay? So that's kind of the horizon income designed for the long term, 10 years or more, with income in the future. Any questions on this one before we move on to our next annuity, which is the horizon growth? Okay, great. So what I like to do when I do the illustrations is sometimes delete everything and exit. It's easy to go to the top and just create a new product illustration. And that just launches a whole new screen here for us. So we go back, select our SPDAs, and we're going to now do our horizon growth. Start from scratch again. Now remember, horizon growth is designed again for the long term, hence the word horizon, 10 years or more, and it's designed to grow and accumulate, not designed for income. So it's more for accumulation. And then they've also added this new benefit called the legacy death benefit. This allows for you to leave money behind from a death benefit perspective, and it kind of gives you a boost to do that. Now, this may be a good option for potential clients who maybe might not have qualified for life insurance, but they still are caring about leaving a legacy behind to their grandkids or children. This may be a good option. So let's kind of look at some quick details on what that looks like from a perspective here. So with this legacy death benefit rider, what you are able to do is designed to do from a benefit calculation base, okay? So it's not an actual accumulation, it's a benefit calculation, just like when we use the indexing strategies, is designed, but when it comes to the income, is the benefit calculation. It calculates a 3% growth on the benefit calculation, plus it adds any index crediting to your policy, okay? So it gives you a boost, if you will, on the death benefit. And then a client has a choice when it comes to the death benefit option. Do they want 100% of that paid out over 5 years? Or they can take a one-time payment of death benefit, but it's only 80% of that benefit calculation base or the accumulation value of the policy, whichever one is greater, okay? Let's look through it. Let's look at an example here. Where was it? A moment. Oh, here it is, right here. So what it's doing is giving you a 3% boost plus whatever indexing strategies is going on here. So the calculation base grows every single year based on these numbers. And then the client can choose whether they want to have 5 payments of amount of money or just a one-time payment. Obviously, in the long run, you'll get more money if you take the 5 payments because you're getting 100% of that benefit calculation base. But if somebody needs the money now, well, then they have that option too with the one-time payments. And what's neat about the illustration software is actually going to show you that so you can present it to your clients. So let's run the numbers and compare them side by side and see how that impacts this accumulation and also how it impacts the legacy death benefit option. So let's go back to our same client. Let's do a 50-year-old Texas client that has an IRA. Let's go to our funding withdrawals. Let's do the same 100,000 so we can compare apples to apples. Again, we have the same indexing strategies. So we have the same ones from the Horizon Income. So we can choose whether we want to do the standard strategies or pay for that rate booster of 1%. We're going to do the same comparison, one with and one without. Then we're going to compare, with the legacy death benefit and one without legacy death benefit. All right, so let's now enter the numbers here. So let's do all no rate boosting strategies, so 25% for the standard options. There you go, 100% allocated. No legacy death benefit. So let's do a quick view, take a look and see what we come up with. So in year 20, we see here that our accumulation has grown to 164,000 from the initial 100,000 in our strategy. So let's go back to our little spreadsheet here. 164,000 is what we have. And now let's change it over to having the legacy death benefit option. As you can see, there's a lot more numbers now. You can see that we have our benefit calculation based numbers here. We have the 6 payment death benefit option, and then the lump sum if they choose to have that. So we're looking at year 20 at age 70, same as we were before, okay? So our benefit calculation base is 255. That's what's going to calculate that 6 pay of 41,000 for those 5 years, or the lump sum of 204,000, okay? So that's the difference between having this legacy death benefit or not. So let's look at here. So let's enter the total accumulation. Is that calculation base of 255, and they can either choose that payment over 5 years or that lump sum, and that's how legacy death benefit option works. Now there's a fee for that. It's not free, right? They charge for that. It shows you here what that policy charge is going to be. But again, if the client, all they care about is accumulation with the death benefit, this may be the best option. This is not designed for income. You want income, you do the Horizon Income. They want just growth, leave a legacy behind. This is the option for you here. So now let's go back and run our second scenario. We're looking at using the rate boosting strategies with and without the death benefit rider. So we're going to go back over here. Let's take off the non-rate boosted and put on the ones that do charge. All right, so 100%. We have them all allocated to the ones that charge. No legacy death benefit. Let's see what this number comes out to be. So in year 20 now, our death benefit is 222,000. Wow, that's a big difference. Look at that. When you pay for this rate boosting, you get 222,000 of total accumulation versus 164. Big difference when it gives you that illustration there. Big difference in accumulation over that 20-year period. Now let's look at the one with the legacy death benefit option. Everything else stays the same. All we're changing is just this from no to yes. Okay, year 20, bring it to the middle. So you can see here that the benefit base has now grown to 354,000. 354,000, quite a bit of money there. And then the death benefit is spread over the 5 years there, 41,000, or capped out at 250,000 right here. Okay. So again, it just really depends on what the client really needs and wants, and what best aligns with their situation. So these Horizon products are designed for 10 years or more, and it just depends if they want the income or they want the accumulation with the death benefit, okay? It's really up to the client to make that determination. Now, something else that's super important that we need to do prior to selling any annuities with National Life is you got to make sure that you complete the training, okay? The last thing we want you to do, and we've experienced this recently, and it's happened to me in the past, is you submit an application, everything gets signed and delivered signed by the client, and you get an email from National Life saying, you know what, you forgot to do your training, you have to redo the application, okay? So everybody on the call today, what I want you to do is to make sure you've completed your training, all right? Now, how do we do that? Let's go back over here. Let's open up a new link over here. Let's go back to National Life. You want to go to your training and products. When you go to annuity, when you go to product training, click on these links right here, check this box, and press submit. That completes your annuity training with National Life, okay? Do that today. Do that this weekend. Do that first before you go sell annuity, and do this often. Whenever new products come out, you're going to be required to do this training. It's very simple. You click on these links here. It opens up a new PDF file. You review it to make sure you understand the products. And then once you do that, you go back to National Life and you press OK. It's that simple. But you have to do that or your application gets kicked back to us and you got to redo it again with the client, and nobody's happy when that happens. Okay? So do that today. Get that done. And you know what? While you're here, you might as well do the same thing for life. Go to the life products, go to product training, look at other stuff here, click on the box and press submit. That way you're up to date on your training. I recommend you do this every couple months. You have nothing to lose. That way you don't get anything messed up when it comes to your applications, and you're up to date on your training with National Life. Okay? That's the first reminder I'm going to give you all today. The second thing you got to be aware of is that interest rates are changing all the time when it comes to these strategies. And actually today, this morning, right before the call, National Life sent an email saying that they are making updates and changes to their interest rates on their annuity products. So you have to be aware and up to date. Read your emails. They're out there. If not, before you sell any annuity, always take a look at the interest rates. Okay, the interest rates are going to be on the same side as your illustrations. So you're going to go here, click on interest rates, and you'll be able to see what is up to date. You have your current life rates and your current annuity rates. All right, you have your new policy interest rates. You click here, and we'll give you a download of a PDF. I already have it open so you can take a look at it. So you'll see here that these rates are as of January 22nd, okay? Oh, sorry, that's the document coming on the 22nd. The rates are effective as of 1/29, okay? But that's going to change on Monday, March 29th. We have some new rates that are coming out, and that just gets sent out today. You can see here that these new rates will be effective on the 29th of March, okay? Now, we look today at the Horizon growth. You can see here that some strategies are staying the same, but some are going up. So the monthly sum cap is going up 10 basis points from 1.15 to 1.25. The monthly cap with that rate booster going from 1.9 to 2. You can see here, I'm not going to go through all of it, you can see that there's some increases, which is great. That's what we want to see. We want to see this participation rates going up. We want the rates to be going up. That's great for the clients to get more performance from their product. And then also we have the Horizon income, the one we reviewed as well today. Some strategies are staying the same, others going up a little bit, okay? So always be aware whenever you sell any of these annuities, just to be up to date on what's happening, because the last thing you do is tell your clients, oh, you know, the rates are here, and then next week they potentially change. Now, what's nice about National Life is they make sure that they update the rates in the illustration software, so you're going to see the most up-to-date information on here. But just be mindful, if you present something this week and then a client makes a decision next week, well, the rates have changed. They've gone up since then, so it may look better, right? Or it could be the opposite, where maybe the rates go down. You present something this week, and then next week, the rates have changed for the worse. So the performance of the annuity isn't as great as it was, okay? So just being mindful of that when you present it to your clients. Always check interest rates, always be up to date on what's going on. And it's as simple as going back to the main page and look at the interest rates before you present a client. Even if it's a representation, just double check, or you make sure you check your emails, but it's going to be there when it comes to those updates, okay? And this is where you go and get that information. So that kind of wraps up the training today. We learned about National Life's Horizon Growth and Horizon Income, how it compares side by side from an accumulation standpoint and from an income perspective. As we can see here, this Horizon Growth is designed for accumulation with an option to choose a legacy death benefit. We can see that the accumulation numbers are a little bit greater when it comes to the products over here. But if you want income for the long term, Horizon Income is the option for you here. Again, it just depends if you want immediate bonus with the split bonus option, or if you want to max out the income, this is the route to go. That's the beauty of having these options. We have choices with National Life. It really depends on what you want to do with the client and what the client needs. And that's all done through really good analysis initially, finding out what the needs and wants are of our clients so you can then make the best product available to them based on what they want and what's important to them. So use this to your advantage. You do a nice little comparison here. I think it really maps it out for you as to how these products are designed and how they work best, and we're moving forward with your clients. So thank you for your time today. And if you have any questions, now is a great time to unmute and share with us.